Hello, and welcome to the special presentation for the week of December 8th, 2017. My name is Glenn Tompkins, and I'm a Senior Product Support Representative and Instructor here at VectorVest, and it's my pleasure to give your presentation this evening. This week's presentation is entitled, How to Spot Signs of Danger in the Market. Dr. DeLito recently wrote an essay on the recommendation profile of the stocks in our database on October 27th of 2017. Let's get right into the software and let's go to the views. We're going to click on the views and change and go back to October. We're going to go to the 27th. We're going to scroll down to the essay, and the essay was entitled The Recommendation Profile. Dr. DeLito wrote, "Last week I said while the mighty Dow soared, the price of the VectorVest composite stagnated. It finally woke up today, but seems to be suffering from a serious case of rotation, which is selling the winners and buying your laggards. I should have looked more carefully though. It was a close case, but the market was actually focusing where you were selling your laggards and buying winners." He goes on to say, let me explain. We all know that the market is rising when the percentage of buys is increasing and the percentage of sells is decreasing. It's falling when the reverse is true. But what's happening when the percentage of buys and sells rise or fall together? The market is rotating when the percentage of buys and sells decrease at the same time. This happens when investors perceive that winning stocks have become too pricey and are taking profits on their winners and go bottom fishing for laggards. Rotation often signals the end of a rally as money flows out of winners and into losers. The market is focusing when the percentage of buys and sells are both rising. This usually happens when investors lose patience with stocks that have not performed well. They sell their losers and buy stocks which have been going up, causing the market to become more selective. This is not a healthy situation and often signals the onset of a serious sell-off. And Dr. DeLito goes back to show an example back in 2000, which I'm going to do for you as well. As you go down, he also said it was a crazy market. The dot-com internets were fading, blue chip stocks were going nowhere, but the prices of biotech stocks were soaring. I'll never forget the night of March 10th, 2000. Biotech had a huge day and the people on CNBC were ecstatic. They thought it would never end. Dr. DeLito also says, read what I said in my strategy commentary that night. The strange world of biotech bubble was revealed by the recommendation profile. Now, I'm going to move over to the tab that says graphs, and we're going to open up that recommendation profile. We're going to move from a stock graph to a market timing graph. This is the VectorVest composite shown here in candlesticks. Now to add the recommendation profile, we're going to click on Add Parameter, and we're going to go add the Buy, Sell, Hold percentage. This is actually looking at the percentage of sells and buys as the market is moving. You can clearly see when the sells are decreasing or the buys are increasing. That's a bullish market. Or when the sells are increasing and the buys are decreasing, that's a bearish market. But what Dr. DeLito is talking about is when they're both moving up at the same time. I'm going to move this from an end of day 1 year graph to a weekly all data. Now I'm looking at the market in all weekly data and we'll zoom in on this time back in 2000. Now I've already drawn lines for you back in that 2000 time period. Look, the market was rising higher. As the market was rising though, the percentages of sells were increasing. People were selling out of stocks. But also at the same time, the number of buys was increasing. This is a good way just to see that the market is focusing in as you see an increase of sells and an increase of buys as the market was rising. And we are looking at weekly data. Well, as the market is focusing, let's find out what it was focusing on. I'm going to add my date line, and I'm going to go into this time period of about February 22nd. All right, that was the culmination of the sells increasing and the buys increasing. Let's go and show you how you can find out what the market was focusing in on during that time. So February 22nd of 2000, we'll go to the Unisearch tool, and I'm going to go over to the Delta Searches sectors. I'm going to set up a 10-day price delta, and I'm going to go back to the date of 2/22 of 2000. Simply, I clicked on my date calendar. I found the year 2000. I went to February, and I found the date of the 22nd. Now, that was the culmination of the sells and the buy recommendations both increasing. I'm going to run this search. Now, I'm looking at the last 10 days sorted by price on the sector. Notice where the market was focusing. On that day, looking back 10 days, the healthcare was up 195%, chemical up 81%. Look at the drug, up 79%. This is where the market was focusing during that time period. If I scroll down, the market was getting out of media, leisure, retail. These were all down double digits over the last 10 days looking at the sectors. So the market was focusing during that time, and drug was heavy, 79% over the last 10 days. Well, let's change that. Let's go over the last 5 days. So that was 2 weeks worth of trading. Let's go to 1 week worth of trading. Still sorted by the 5-day delta. Healthcare at the top, still 189%. Drug, 19%. Electronic, 10.5%. This is where the market was focusing. Remember, the sells were increasing, people were selling out of stocks, and the buys were increasing at the same time, showing you where the market was focused by utilizing the Unisearch tool to do so. This time, the investors were heavily buying into internet and biotech stocks and selling off of their lagging stocks in their portfolios. Folks, we all know how the tech bubble turned out. This was definitely a danger sign in the market. Now let's move over to rotating markets. A classic example of this just happened recently. Now I'm going to go to a different graph. Go to the graphs. I'm going to open up a different graph. I'm going to go from a stock graph to a performance graph. Now, I want to check the performance of the major indices to see how well they've done over time. I'm going to take off the VVC, and I'm going to add some indices. I'm going to add the Qs, comma, the IXIC, comma, the Dow, the DJI, comma, the S&P 500, the SPX, comma, and the lower dollar stocks, or the Russell 2000, the IWM. Now they're all here, and I'm going to add them to my graph by simply clicking into the boxes. I can clearly see that over the last year, the Qs have really outperformed everybody. So the tech stocks are really on the rise, followed by the IXIC, also tech stocks, which is the Nasdaq. Looking at the Dow, which is third here. So all of our indices over the last year, though, the market has gone up. Now, watch this. I put this on a 6-month graph, and the tides turn a little bit. Now the Dow is outperforming everybody by far. People are investing in Dow stocks, followed by the SPX, and then the IXIC, and then we have a mixture of both the the IWM and the Qs towards the bottom. But look at that. The Dow is really taking control. Let's move down to 3 months. The Dow is still ahead, but look at what else is going on. The IWM is now performing right behind the Dow. This could be another indication that the market is now rotating into lower dollar stocks that are found in the Russell 2000. But now this is where it gets interesting. I'm going to put on the last 1 month. Remember back on November 28th, let me go find that on the date. Remember on November 28th, the Dow had an outstanding day. It was up about 300 points. And look, the tech stocks, the Nasdaq, got hammered. That was a definite classic example of rotation. The people were getting into the Dow recommended type stocks and getting out of the tech stocks. The IXIC and the Nasdaq both took a header to the downside. So people were moving more into the Dow, getting out of the tech stocks. And I'm going to show you something. So 11/28 was the day that this occurred. I'm going to show you where we were rotating to during this time. But look at that. Dow's moving up, nice big move on the Dow, and the Nasdaq and the IXIC were definitely moving down. Let's go back to the unit search tool. Let's go find November 28th of 2017. I'll go find 2017. We'll go to November, and the day it happened was the 28th. I'm going to go to the close on the 28th. I'm going to run the search of the 10-day price delta. In this case, though, I'm going to stick with the 5-day first. Run the search as of the close on 11/28. What's at the top of the list? Building, aerospace, machinery, steel, all at the top of the list. Well, let's do this. This is the 5-day delta, right? Let's now go do a quick test of all of the sectors from the 28th to the 29th, one day. Sort this list by percentage price change. Wow. Retail over that 1 day period up 2%. Transportation 1.89. You guys remember money was going into the bank stocks, and look at that, up 1.26%. This is a classic sign of showing you where the market was rotating to, what sectors, and let's see what sectors we're coming out of. Look at that. Electronic, software, internet, computer. A lot of people were holding tech stocks, and they got hammered on that day. That's because that was the day where the Nasdaq fell as the Dow went up, and money was flowing out of the tech stocks and going into retail, transportation, and bank. Well, let's take this a step further. So that happened then, right? Let's go over to the Viewers tab. And I'm going to go to the sector viewer. What's at the top of the list right now? Paper. Well, paper, building, machinery, retail still at the top of the list within the top 5. Leisure, bank is still up here as well. These are the sectors that right now, as of yesterday's close, are the high-flying sectors. If I scroll down, what are we getting out of? We're focusing and getting out of mining, drug, pollution control. Those are the sectors that are starting to lose out. But right now, the top sectors, or where the money is going, is looking at the paper, building, machinery, retail, leisure, and banks. Folks, the moral of the story is that focusing and rotating markets are signs of unrest in the market and could be signs of danger. But now, I've shown you how to take advantage of the warning signs just the same. I'd like to say thank you for joining me for this week's presentation. We will have a Q&A session on Monday, I believe at 2 p.m. If you have any questions, please give our product support staff a call. The number is listed. And thank you, and we look forward to hearing from you. Have a great day.